Good morning. Welcome to Stock Market Today. It's Monday, March 15th, 2021, the Ides of March. This is Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for an email where I get a lot of the content for this show, give you daily stock ideas to consider upon further analysis, and it hits your inbox every trading day before the market opens. Let's dive in. New day, new week. U.S. equities finished mostly higher in Friday's trading, with the Dow, S&P, and Russell all making new closing highs for the second consecutive day. The NASDAQ broke a three straight week of streak of declines for the week. However, on the day, tech and comm services were decliners. Defensives, industrials, and financials outperformed. Treasuries were weaker, with the curve steepening notably on the week. The dollar was stronger on the major crosses. Gold finished down 20 basis points. Crude oil settled down 60 basis points on Friday afternoon. As we look at the sector level, your outperformers, REITs, industrials, utilities, and fins. Underperformers, as I said, comms and technology. Now, as we get here to the desk this morning, taking a look at things, kind of a mixed bag with futures kind of slightly higher. S&P futures up about 20 basis points. That's after European equities were trading higher and Asia was mixed overnight. Treasury yields are largely unchanged, holding above 1.6%. After trading as high as 1.64% on Friday, highest level since February of last year / pre-pandemic. Curve is steepening. Dollar is mixed. It's up against the euro and yen, however, weaker against sterling. Crude oil is ticking up a bit. Gold is trading higher. The metals complex across the board, however, is mixed. Let's dive into the charts, right? And let's see what's going on here. So the trend remains up. That's fair. We can say that safely. Record highs for SPY and IWM. That's unchanged from Friday because it happened again. So not a ton to say here differently other than, the Qs are wavering. And what I will point out is that the Qs caught a downgrade at Chaikin Analytics this week. Over the weekend, the ETF power gauge rating for QQQ went bearish. First time since late 2018. So first time in about 2.5 years that the Qs went bearish. So just something to keep in mind. From a trend perspective, we're up, but who's going to be the outperformers? Right? That's always important, right? It's not enough to be right. You need to be more right than the market. The only way to outperform the market is to be in the areas of the market that are outperforming. If you just want to be average, which is fine. A lot of people are happy just getting the average. And if that's you, great. You can invest in the indexes, get the averages, and use your time more wisely. Or your time can be better spent somewhere else. However, if you're trying to outperform, if you're trying to do better than the average, well, then you have to skirt to the areas of the market that are outperforming, right? So right now we have small caps outperforming the Qs. It's been that way for a while. This is nothing new. We and others have been talking about it. All right, so we have our support levels, 370 to 380 on the SPY, then 340. Right? The whole roadmap is the same. S&P has held support at $300. We're wondering if new highs are to follow. Now, maybe they are, maybe they aren't. But the question is, even if they have new highs, will SPY be going faster? Will IWM be going faster? That's the question. That's what's on everybody's mind right now. Our roadmap remains the same. Rally is broadening out, closer to the beginning of a cyclical bull than the end. Continue to skirt to the relative strength. That's how we see it. SPY, IWM, and Diamonds trade to record highs. That's what we're writing about in our market minute today. QQQ is under pressure and downgraded to bearish this week. Like as I said earlier, first time since late 2018 that QQQ had a bearish rating. Commodities continue to grind higher. That's one of our favorite themes. Treasuries and the dollar trade to key inflection points. That's largely unchanged from last week. Those inflection points, though, remain in play. And as I said, futures do point to a higher open here today. Looking at the major indices now from a power bar perspective, Dow added 90 basis points, 8 to 7 bulls to bears there. S&P 500 After earlier weakness on Friday, ekes out a gain, 12 bips, 144 to 46, bulls to bears there. NASDAQ lower. There's your underperformance again, right? There's your underperformance of the Qs. You've seen the shift. We've watched it play out day in and day out. 19 to 20, bulls to bears on the ratio. Small caps outperformed as they have been doing for a while. 798 to 186, bulls to bears there. Bonds, big downtick lower, big spike in yields. Here's what's interesting. Big spike in yields. Not a ton of damage up here. Not a ton of damage up here. Remember my playbook. Remember my roadmap. Go back to my note from February 28th, where we talk about what happens following big spikes in yields and how the market over the next few weeks starts to digest that. Real estate, your best performing sector, up 1.72% on the day. One bull, three bears there. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Major markets are mixed. Stock of the day. Hey, got to call it out. Apple. Bearish rating for Apple. Been bearish for a couple of weeks. So underperforming and bearish. So I know Apple is one of those stocks that everybody loves to own. Are they a great company? Yes. But are they a great stock right now? No. Right. And that's the difference. There's a difference between the stock and the company. They disconnect in the short run. And the whole point of viewing things from a systematic, quantitative, objective lens is to say to yourself, you know what? Better uses of my capital right now than Apple. Better uses. Resistance here between 130 and 140. Bearish money flow, working towards an overbought condition. So we have a bearish stock underperforming with bearish money flow as it trades below a long-term trend line. If we covered up the symbol here, you would just simply say to yourself, that doesn't look like anything I want to own. Shouldn't matter that it's Apple. Take the subjectivity out, be an objective student of the market, and recognize when you should own something and when you shouldn't. Stock of the day is Apple. If you own it, today might be a good day to question your assumptions. Let's take a look at the sector tracker now, moving to the major sectors over the last 5 days of trading. So encouraging from a trend / if you're bullish perspective is that, well, all of the sectors are higher over the last 5 days of trading. All of them are higher. Discretionary leading, that's encouraging. REITs and utilities in the top three. You can see a better board, certainly. Right? Those are defensive groups. Materials, industrials, and fins round out the top half. Staples, tech, comms, healthcare, energy, bottom half, but everything higher. Energy's had a great run, taking a little bit of a pause here in the near term. Okay, that's fine. But everything's positive. Well, what can we say here? That's the trend, and the trend is up. And over the last 5 days of trading, everything's positive. Our industry in focus is mining services, which, for anybody who's been paying attention to my views here over the past few months, the commodity trade has been something we've been vocal on the bullish side of the camp. Past 6 months, been an XME mining services has been an outperformer by 55%. So there's that. Power bar ratio, which looks at future potential, is very strong, 11 to 1, bulls to bears there. Number 9 of 21 subsectors, and it's moved, but it has moved down 2 slots over the past week. CMC, commercial metals, Schnitzer Steel, SCHN, and Alcoa, AA, all with very bullish Chaikin Power Gauge ratings. And, as Dave Keller likes to say, don't confuse the top of the page with resistance. This is a nice steady uptrend. Higher highs, higher lows. Chart starts out in the lower left and ends in the upper right. Massive outperformance. Look at that money flow. Overbought, oversold indicator working towards an overbought condition, but not there yet. Fund has a bullish rating. We touched on the ratio already. I mean, there's not a ton to say here bad, other than maybe we're starting to get a little extended in the near term. Maybe we're starting to put in a, get outside the bands and getting close to overbought. Right? Okay. That's tactical. That's near-term tactics. This is a structural uptrend and has been for the past 12 months of trading. All part of that commodity theme. And look, clear sign right there. Boom. Outperformance. And away we go. So, like we were talking about earlier, where's your outperformance? You want to do better, you have to skirt to the outperformance. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, gainers and losers. Viacom. Potential Netflix talking about licensing some of their content. Viacom benefiting there. L Brands increased their guidance. That stock higher by nearly 9% on the day. Boeing highlighting some orders, sent that stock higher by 6.8%. Disca, no real news there, up 6%. Media stocks have been on absolute fire for the past few months. AAL upsized a debt offering, and that stock higher by 5.5%. Loser side of the board, Ulta earnings announcement. They take 8.5% out of the stock. Lennar caught a downgrade at RBC, down 3.4%. Cadence down 3%. DHI down 3%. APA down 3%. Didn't see anything company specific to drive trading in those names on the day. So, not really much to add there other than this is just what it is. We're kind of in a macro market now, right? Earnings season largely over. Here's a long-term view of commodities. I know, commodities have had a good run. A lot of people might feel like they've missed it. But I took this chart back, I don't know, about 15 years. DBC going back 15 years. You think you missed it? No. Are we going to go up in a straight line? Probably not. And maybe this is the top. Maybe this is just we're hitting resistance. I have no idea. I think odds favor a continuation of the trend higher, right? As always, it's a probability game. It's a roadmap, but I think it's pretty simple. You've had a nice run off the lows, and now you're dancing with $18. You break $18, you have to start thinking about the next levels, which are largely, I don't know, up around 24, right? Which doesn't seem like a lot until you realize that that's another 33% if you get through 18. If you get through 18 and you go to 24, that's $6 on an $18 base. It's another third. It's 33%. And that just gets you back to this consolidation. Okay. We've been talking about it for a while. What's interesting to me is look at that long-term view of DBC relative to SPY. Look at how much, if it reversed, look at how much room there is, right? This is what I'm saying. We could be at the start of a long-term cycle here. And if it is, it plays out over years, folks. It plays out over years. It doesn't play out over a couple months. Maybe you missed this first leg. Okay. I think you're watching $18 here closely because a break sets you up for the next leg. Dollar is interesting, right? Take a look at the dollar here. This is one that's at an inflection point, as we said. Dollar index 92, the level to watch. Break this 92 level, risk assets start to struggle, I think. Fade from 92, and we continue with the same roadmap of an inverse correlation between the dollar and risk assets. Solid congestion here. And 92, could we poke through? Of course we can, right? It's more like a level to watch, right? An area of interest. If I really want to, it's really more like 92, 93, where we want to be paying attention to. Watch the RSI, actually, as it's put in a series of higher lows here. This is kind of interesting. So maybe we test 92, back off, and then take another run at it. I don't know, but we're watching the 92 level on the dollar closely. Well, at the same time, here's the 10-year, just getting you back to pre-COVID levels. Everybody's up in arms. We're just back to where we were pre-pandemic. Above the moving averages. We do have a Fed meeting this week, so all eyes on Chairman Powell. But honestly, the rapid spike over the past few weeks is what spooked the market. I think if we start to grind in this area, market does a good job of absorbing it, and we continue on that, at least as our base case. So that's what's on my mind on a Monday morning. Head over to shakenanalytics.com/test drive. Be well, be safe. We'll talk to you soon.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.